Welcome back. Well, the market's not looking good. The bank Nifty is down 700 points once again, and the Nifty is now approaching that first 5-minute low. In fact, practically the Nifty is at low point of the day. You know that 16,840 is meaningless. So from trading point of view, you are at the low point of the morning, and a lot of stocks are seeing big declines. Larsen and Tubro, by the way, is now down 3%, and Larsen has now corrected 13% from its recent highs. Well, George Alexander Muthoot is our next guest. He is the managing director at Muthoot Finance. George, hi, good morning. Thanks a lot for joining us. Gold prices are surging. That's, I'm assuming, good for your business. But tell us, what's the outlook for the next quarters?
Yeah, you're right. Gold price, etc. is now, you can't say surging. It is steady. So it is not unduly rising nor unduly falling. It is steady. So that's a good sign. But all this gold loan business depends on the economic outlook also. If the economy is moving up, if there is credit demand, then gold loan demand also will go. So now what we see is Q3 was also not very good because of some Omicron, etc. But now in the Q4, we see better traction. Gold loan business is moving up, and I think we should do much better in Q4 than in Q3. Q3 was a flat quarter as far as growth was concerned. We should see Q4 as a much better quarter. We see growth coming from all over the country, and I think things are looking good. And here forward, I'm sure the economy also will start looking up.
So, Mr. Muthoot, good morning. Are you losing any of your customers to peers like banks or NBFCs? Because there is a lot of competition that is picked up in this space now.
Yeah, as I always say, there is a lot of competition in good sectors and prospective sectors where there are a lot of prospects. So gold loan is one of them. All the banks, most of the banks want to show up their or show good credit dispersals, and that is why they are also looking at gold loan. So competition from banks and NBFCs have been there always. Of course, in the last 1 year, 2 years, the competition has been much stiffer. But then we see the market also expanding. More and more people are thinking of gold loan as a quick funding option. So more and more people who earlier were not very keen to take a gold loan are also looking at gold loan as a good alternative. And that's we see the market growing. That's why we have not seen our business degrowth. All have grown. The banks have grown. Some of the NBFCs have grown. Muthoot has also grown. So it only shows that the market is expanding.
Now, the reason I asked Mr. Muthoot is because not only have you underperformed your peers like Manappuram, for example, which have seen double-digit growth, while your growth was around 8.5%, but you've underperformed your own, historical growth performance. I mean, if you look at the preceding 4-5 quarters, it's been on an average about 17 to 20% growth, whereas in Q3 it came down to about 8.5%. So just trying to understand that, is there a lot of competitive pressure that you're looking at? But go ahead, tell us about FY23. What kind of reasonable growth rates are you looking at?
So if you said about low growth in Q3. Q3 we expected good growth, but what happened? Our disbursements were very high. Disbursements are very, very high. But then we had a lot of legacy gold loans, which we had given a year back. See, when the pandemic struck, there were a lot of people who needed money, and Muthoot was quite open, and we did a very good disbursal in Q2 of last year. So usually we do about 25,000 crores of disbursals in a year, in a quarter. In Q2 of last year, we did 50,000 crores of disbursals. So we gave a lot of money. Some of the people were unable to take back the gold because the business, as I said, economy has not really picked up. So we had to dispose of or maybe close some of those loans through auctions, through settlement, etc. So though the disbursals were good in Q3, there were a lot of repayments through auctions, through others. That is why there was a flat growth. But this Q4, we should certainly see good growth. We had given a guidance of about 15% for the full year. Probably we may not be able to do the 15, maybe 12, 13 is what we should be expecting this year. Now you asked about the 23. I'm sure the economy is picking up. We should see, we have always been guiding a 15% growth. I'm sure Q3, not Q3, 23, financial year 23, we should see more than 15% growth coming in the gold loan sector. That's my optimism.
Okay. George, what about the teaser rate? How much is your portfolio, at the end of the Q3 was under teaser rate?
See, our teaser rates are short periods, so it is good for 1 month, 2 months, etc. So teaser rates we have to be competitive with the market. We have to show the world that we are also in the business. I cannot go and advertise for a big high rate. I have to advertise for a small rate. So teaser rates are part of the business, and we've always been doing. But we will try to maintain our interest spread, the net interest spread, which is about 10-11% is what we will try to continue to maintain. The borrowing rate is also coming down. See, now we are funding even at 6 and 6.5% interest. So the borrowing rate is coming down, and maybe you can see it as passing out some of the benefits to the customers and getting more business.
That is fine. So what's the current portfolio under teaser rate, and what's the guidance on the spread then?
This teaser rates is dynamic, so it is given only for a month. So people whose loans cross the 1 month, the teaser rates goes up. If they go to a little one step higher rate, so there is no point in saying that we give loans at teaser rates. Probably 20-25% of the portfolio will be given at teaser rates, but going forward, these rates stabilize after 6-7 months.
Okay. Well, earlier you were telling us that it is your optimism that gives you this 15% growth target for the full year. So we'll take that on board. But on asset quality, there's been quite a bit of weakness, right? I mean, your gross NPAs went up to almost 4% in the quarter gone by, compared to less than 2% in the previous quarter. So just tell us a little bit about that. Do you see further deterioration, and how much can be recovered from this gross NPA in what time frame?
See, I've been always telling you, last 3-4 years, I've been always shouting at the top of the roof that the NPAs in the gold loan sector don't convert to a loss. So none of these NPAs, which you see, the 1.85, which you saw in Q2, the whole thing was closed in Q3. And Q3 at 3.85 is a new NPA, which will also be closed in Q4. But we have never lost 1 rupee. We will not lose 1 rupee of principal. Probably a little bit of interest where we should get a higher interest. Our yield may come down in the interest side, but we will never lose the principal. See, it's just because we are giving a little more accommodating the customer and not auctioning his gold. I can be very strict and harsh and auction all the gold and my NPA will be 0. But that's not what we would like to. We would like to give a little more time to the customer. When we give time to the customer, it sees an NPA. And those NPAs is something which we can accommodate in our books. And none of for these NPAs, we don't accrue any interest. So we are able to absorb that also. But finally, when we auction it or when they take back, we get the full principal. We don't lose any money on the principal. Probably a little bit of interest concession is to be given. That is understandable. Other than that, NPAs of gold loan companies are never a headache, never a problem, and they never come to a loan loss. Our loan loss is only 0.03% in a year.
Okay. So you want to give us some guidance as far as margins are concerned as well? I mean, after the change that we've seen in interest rates on a downward slide, what is the impact that this would have on your margins?
No, as I said earlier, our cost of borrowing is also coming down. See, we have seen almost a 250 bips or 2.5% drop in the borrowing rates in the last 1.5 years. We have been able to pass on some of this to the customers, and our margins have always been in the range of 10, 11, 12%, and we should continue to do in the 10, 11% going forward also. That's a reasonable margin, which I think should keep the company and the returns also good for the investors.
Okay, George, we'll leave it there today. Thanks a lot for joining us.